Time to take a look at our financial portfolios and see if we're holding all the assets that we want to take advantage of the many opportunities before us. As we look back on 2025, we see that the best performing asset was silver, up 146%. In 2026, I'm expecting silver to do even better, and in this video, I want to give you 5 reasons why you don't want to miss it. Reason number 1 is a structural deficit, meaning that supply can't keep up with demand. So we can see here that silver has been in a structural deficit for the last 5 years. So demand for industry and investment and other uses is exceeding the amount that can be supplied. And when that happens, we have to dig into existing silver stockpiles that are above ground in order to meet demand. So as those stockpiles dwindle smaller and smaller and smaller, holders of silver are going to demand a higher and higher price in order to part with them. So this is the primary force that has been driving the bullish momentum in the price of silver lately, and that is definitely going to continue in 2026. Reason number 2, sovereign demand and control. So in 2025, we saw several countries increase the amount of attention that they've been paying to silver. In particular, the United States, silver is designated a critical mineral by the U.S. government. The U.S. Geological Survey has officially added silver to its list of critical minerals. This could put further demand pressure on a metal already in short supply. So, silver has never been on this list before, and all of a sudden in 2025, the U.S. says this is a very important metal for us. And U.S. is not alone. Russia is likely buying silver for its reserves. So, at first this was a rumor. Now we know it is a confirmed fact. The Russian government has allocated a certain amount of money every year to buying precious metals, including silver. And finally, China. China will tighten controls on silver exports starting January 1st, a couple weeks ago, raising concerns for global industries as prices hit record highs and the metal gains strategic importance in clean energy and defense. So, we see China restricting the export of silver out of its borders. So the main theme here between the US, Russia, China, as well as many other countries, is we are paying a lot more attention to silver. We want it in our borders, and we might even actively buy it. Number 3, backwardation. Backwardation is a property of futures markets, and while it's not necessarily a main driver like the first 2 examples that we gave, it could cause a feedback loop that can make a bad problem even worse. So what is backwardation? Well, first, let's start with the normal state of affairs. It's called contango. Basically, if you look at the futures curve of any commodity, you will find an upward sloping curve like this, where prices will be higher further into the future. This is the normal state of affairs. And why is that the case? Because taking an asset in the future causes storage, financing, and insurance costs. Okay, I'm willing to pay a higher price to get my asset in the future. That way, I don't have to pay storage costs, financing costs, insurance costs along the way. However, backwardation is when this flips. The curve goes the opposite way, and investors start to pay a premium to have the physical asset now. So, not only are they willing to pay more to incur those costs, storage, financing, insurance, but they're paying an additional premium to get it into their hands now. So, that happens when, generally speaking, there's a benefit to owning the physical material now. So, in the case of silver, you can imagine that's for investment, that's for manufacturing, that's for strategic purposes. So there's a very interesting feature of backwardation I want to show you. Silver, how record backwardation could ignite a triple-digit rally. And this was published back in October, so about 3 months ago. Silver's futures curve just did something we haven't seen in over 40 years. It flipped into deep backwardation. The front-month contract is trading about $3 higher than the later ones, marking the steepest inversion since 1980. 1980, of course, was the peak of the last silver bull market. When the futures curve inverts this sharply, it usually means on 3 things. Either supply is running into stress, demand for physical metal is surging, or the usual price discovery process is breaking down, or perhaps a combination of the 3. In October, we were in the highest level of backwardation since 1980. You can see how deeply it's backwardated. And there's this giant spike here back in 1980. So we're not quite at that level, But we are doing something very, very unusual. And what this means is investors want physical silver. That's it. And they'll pay extra to get it. Massive premiums. So this is a huge thing towards the end of 2025. And this is going to play a massive part in 2026. And what happens is we get a feedback loop. So investors might be thinking, oh, well, I'd rather have physical, but I don't know about everybody else. Once you see that the futures market goes into backwardation, you realize, most people in the market, right? The market in general is expressing the same preference. So if everyone else tends to want physical silver now, they don't want to wait for it. Then if I want silver, I better get my hands on it too. And you get this runaway effect, kind of like a bank run. So I think this is going to play a major part moving forward. If silver is truly shifting from a paper market to one driven by physical demand, a major re-rating seems inevitable. For decades, traders have fixated on the old nominal high of $48 set in January 1980, treating it like a ceiling. But that number doesn't tell the full story. Adjusted for inflation, the same $48 high equals about $199 per ounce today. In other words, silver hasn't made a real new high in over 40 years. Silver has spent decades forming a massive cup and handle base, which is one of the most powerful continuation patterns in technical analysis. On a logarithmic scale, the measured target for that formation points toward roughly $400 per ounce. $400 per ounce. So he's not saying that that's necessarily going to happen in 2026, but just that that's what the technical pattern is suggesting. I think that's totally reasonable. And like I said earlier, I'm expecting silver to do better in 2026 than it did in 2025. Number 4, loose monetary policy. The Federal Reserve has recently changed its monetary policy, and it's not getting a lot of coverage, and it is going to be very good for silver. We can see here on October 29, 2025, the Federal Open Market Committee, so basically the Fed, announced that it would cease the runoff of its securities holdings starting on December 1, 2025. So if you don't know what this means, basically for the last 3.5 years, since June of 2022, the Fed was engaged in what's called quantitative tightening. So basically, it had tighter monetary policy and less currency was out there in the economy. Well, it's putting an end to this policy, or it just did about 6 weeks ago, and it's returning to policy normalization. So what we know from the Federal Reserve is that normally they print the currency into oblivion, and then the prices of everything goes to the moon, right? Including food and housing and financial assets. So they're putting an end to the tightening policy that was going on the last 3.5 years. They're going back to normal. So they're not necessarily expanding the balance sheet right away, but I think we know that in a few months some problem will happen, and they'll have to do QE infinity. So that's going to be happening, and they're going to be cutting interest rates more often than not. So if we look here at the dot plot, we see that currently in 2025, we're about at 3.5 or 3.75%. The median estimate is to drop by 0.25%, but you can see all the possible forecasts are actually fairly low. We could drop by 1.5% in 2026, and so lower interest rates on the margin are very good for precious metals. Basically, very good for any scarce asset. So I think that monetary policy is very loose. This is extremely bullish for silver. Number 5, volatility. So volatility isn't necessarily a cause of success, but you can certainly use it to your benefit if you understand it. And the first thing I'll say about volatility, it's not just a volatile price over time. It's also a volatile price over space. Let's take a look here. We see a disconnect between the East and the West. This comes from the ape of Gold Street. We've just entered completely uncharted territory in silver. A $6 premium between Shanghai and the COMX has simply never existed before until now. China just settled silver at $77, while the COMX trades at $71. Historically, this spread barely moved beyond $2 because arbitrage kept prices aligned. A $6 gap means that mechanism is no longer functioning. At those levels, COMX and LBMA are effectively broken. The incentive to pull physical metal out of COMX and into Shanghai is massive. And he's absolutely right. There is a huge incentive to do this, but there's a lot of friction to actually getting it done. So, while a $6 spread is massive and creates huge profit opportunities, arbitrage opportunities, it's not necessarily easy to close that gap and execute.